Hey everyone, hope you guys are all having a wonderful day. Today we have a lot to talk about because we had some amazing news come out from the government and the bureaucracies this week. Now, before we get started, please make sure to hit that subscribe button. That way YouTube knows people are actually interested in cryptocurrency content and the overall economy. So, what is this big news? At this point in time, it is the GDP announcement that came out a few days ago. We were expecting 2.4%, and the actual number was all the way down here at 1.6%. An absolute disaster. But this is making the Federal Reserve very, very happy because what have they been doing over the past few months, even past few quarters? They've been saying, hey, we're not going to raise interest rates anymore, right? Because we don't want to see the economy kind of tip over. They've been prioritizing the economy over fighting inflation. So what's been happening? Jobs are continuing to be pumped out. Even if there's second or third jobs for most Americans, there's still jobs. People, if they have those two or three jobs, they can pay for everything they need to do, and the economy keeps on churning. On the other side of that, inflation has started to go back up because we're no longer really fighting against inflation. We've just been holding this mentality of higher for longer because the Fed was hoping that eventually something is going to slow down, not break, but just slow down. And this is the slowdown that we've been looking for. The weird thing is, this GDP data for the last quarter, if we're slowing down, but inflation is going up, there's a weird disconnect there. But the overall theme of what you're going to be hearing over the next few months is, okay, well, if the economy is slowing, that means there may be some more warning signals up ahead, right? And if we have those warning signals, that means the Federal Reserve is more likely to start cutting. And that opens up the question, when will they cut? Well, if you ask me, that opens up the door to possibly cutting sometime this summer, kind of around July. And it really comes into effect, I think, in the fall. I think we have a high chance of having our first rate cut before September, most likely even in August. Once the market has started to price that in, that's where things start to go crazy for the overall market. Now, the market is still kind of absorbing this news. I think we're going to have to see more warning signs before we necessarily get into that fever where everybody's like, okay, finally, rate cuts are here. Let's go boom. Because remember, at this point in time, with Bitcoin dropping, the stock market dropping, what have they been actually pricing in? They've been pricing in less rate cuts in the year 2024. In some circumstances, people think we're not even going to have one until 2025. At this point in time, because we see that the GDP, right, the growth is starting to meaningfully slow, that's going to be a good indicator that the Federal Reserve is most likely going to start cutting rates this year, which means Bitcoin and a lot of other assets still have a lot more room to go, especially Bitcoin here. And you can say altcoins in general, you know, mainly because we just had the halving and we still have that supply shock issue, right? There's not a lot of Bitcoin out there right now. There's even less Bitcoin going out there right now because of the half of the reward for the mining of the blocks. But here's where things get interesting. Once Bitcoin eventually does start to go higher, it's okay when we buy it up whenever it drops and stuff like that. However, when these hedge funds that own all the ETFs, when these ETFs are finally forced to start buying up loads more Bitcoin because all of a sudden everybody is very interested in buying it again, what happens? There's less Bitcoin for them to buy, which really brings into effect that supply shock. And that's where we see Bitcoin going over 100,000, maybe up as far as 150,000. I've seen numbers as high as like 400,000, 500,000. I'm not trying to get that excited here, but I do believe this supply shock will be once in a lifetime because it's going to be the first time that we have access to the ETFs and them pouring hundreds of billions of dollars into cryptocurrency. I believe that's going to be a huge thing for us. So my main goal here, whether you guys are talking about stocks or cryptocurrencies, is going to be to continue to dollar cost average in a meaningful way, waiting for that larger move to happen. At this point, it is still going to be very hard to determine when that move is going to happen. But even if Bitcoin were to drop another $5,000, $10,000, I would still end up dollar cost averaging just because of the chaos that's going to ensue once we have those rate cuts start to come in more into focus. Again, we don't have to wait for the actual cut to happen, even though that would be a great thing. It's when the market starts to perceive that the rate cut is going to happen imminently, you're going to see everything get stronger and stronger and stronger. Think of last October when Bitcoin really started to take off. At that point in time, everybody was realizing that the Federal Reserve was not going to be hiking rates much longer. And so, if they're not going to be hiking rates much longer, you might as well get ahead of the curve and just start buying now. And then, boom, we saw an explosion. So, while Bitcoin is going to have a really good time here, altcoins, they are really dependent on those rate cuts even more than Bitcoin, I would say. So, as we've seen some of those altcoins really drop down like a good, let's say anywhere from 20 to 50% on average for a lot of these altcoins, those are still very great buying opportunities that I'm going to be taking advantage of. As far as my leverage positions, I'm still going to be sticking to 2x, maybe 1x. If you want to get bold, you can go 3x and above, but you guys are really going to have a good strategy there because your leverage is going to have to be crossed, which means you're going to have to put all of the money together. That whole pot is in danger if something really goes bad. So make sure you guys have a lot of cash on hand in that portfolio. So if the market does continue to dip down and we're kind of in this neutral bearish mentality for the whole market at this point, you guys know that your account can take it. You're not afraid of being liquidated because that's the worst feeling possible because you will get liquidated and then the market will go reach all-time highs and then you'll just feel absolutely horrible. You don't want that to be the case, all right? So, to understand this completely, just focus on what's happening from an economic standpoint because as soon as jobs really start to take a hit, that's the immediate green flag you guys are looking for to see rate cuts happening imminently. And of course, Bitcoin starting to pop off. Everybody across the world is waiting for the opportunity. And of course, we are looking for different ETFs from around the world to start hopping online, if you will, over the next few months. That should also give more fuel to the fire of causing Bitcoin to easily break above $100,000 now that we are post-halving. Let me know what you guys' thoughts are on this. Thank you so much for watching. And of course, please make sure to subscribe. And if you're a super fan, make sure to also hit that like and comment down as many comments as you guys want to. I appreciate it. Thanks.